Wholesale prices accelerated at a faster than expected pace in February. Another reminder that inflation remains a troublesome issue for the U.S. economy. The Producer Price Index, which measures pipeline costs for raw, intermediate and finished goods, jumped 0.6% on the month, the Labor Department's Bureau of Labor Statistics reported Thursday. That was higher than the 0.3% forecast from Dow Jones and comes after a 0.3% increase in January. Excluding food and energy, core PPI accelerated by 0.3%, compared to the estimate for a 0.2% increase. Another measure that also excludes trade services increased 0.4%, compared to the 0.6% gain in January. On a year-over-year basis, the headline index increased 1.6%, the biggest move since September 2023. A busy morning for economic data also showed that retail sales rebounded, up 0.6% on the month according to Commerce Department data that is adjusted seasonally but not for inflation. The increase helped reverse a downwardly revised 1.1% slump in January but was still below the estimate for a 0.8% increase. Also, initial filings for unemployment insurance nudged lower to 209,000 last week, a decrease of 1,000 and below the estimate for 218,000, the Labor Department reported. The market focused on the PPI release, which comes 2 days after the Consumer Price Index, which measures what consumers pay in the marketplace, showed that inflation was slightly higher than anticipated on a year-over-year basis. PPI is considered a leading indicator for inflation as it indicates costs early in the supply chain. The BLS reported that about two-thirds of the rise in headline PPI came from a 1.2% surge in goods prices, the biggest increase since August 2023. As with CPI, the acceleration was traced to energy prices, which saw a 4.4% increase in the final demand measure. Gasoline prices jumped 6.8% at the wholesale level. Services costs increased 0.3%, boosted by a 3.8% surge in traveler accommodation services. On the retail sales side, the data indicated that consumers kept ahead of CPI inflation, which increased 0.4% on the month, though sales were still sluggish. Excluding auto, retail sales rose 0.3%, 1/10 of a percentage point below expectations. Motor vehicle parts and dealers saw an increase of 1.6%, second only to the 2.2% gain for building material and garden centers on the month. Despite slumping prices, gasoline stations reported an increase of 0.9%. Electronics and appliance sales rose 1.5% while miscellaneous store sales increased 0.6% and restaurants and bars were up 0.4%. Retail sales posted a 1.5% gain on a year-over-year basis, below the 3.2% increase in the CPI. This is breaking news. Please check back here for updates.